Hello guys, today I'm going to share with you the company that own the New York Stock Exchange market. Means that this exchange, New York Stock Exchange, every day we buying the share and selling the share is actually owned by this company. So this company is called Intercontinental Exchange. So the ticker symbol is ICEIs. So they also listed in the New York Stock Exchange for you to buy and sell. And founded in 2000s. The website is this one, and then this is the basic information for you. So the short introduction of the ICE company. This company is an American company that owns the exchange from financial and commodities markets, and it operates 12 regulated exchange and marketplace. Means that the exchange, right, is the stock market that for you to buy and sell, and then there is a commodity market, means a future options or something. So what is their business model? Before we look into the details of this company, the first things that we always have to look at is we want to know that this is a good company, have the really good business model with a very wide economy mode. So this company is the largest exchange operator in the world. Okay, because New York Stock Exchange is the largest in the world. And it runs 7 cash exchange and 5 future exchange across the globe. So what is the future and the options they have? They have the energy future, agriculture, financial future, cash equity, and then the fixed income and over the counter, OTC. So this is all the futures market that they are actually offering. So where this company generating the profit? The two big profit income from this company is they're doing the trading and clearing. For only the trading and clearing, it generate about 2.5 billion in 2019. And then the data subscriptions, they also offer the data subscription to the broker, means that they give the live data to those broker, and then this data subscription service generate about 2.7 billion in 2019. So sometimes you know that the broker can provide you the live data. I know some broker like TD Ameritrade, they give you the free live data, but interactive broker sometimes they charge you a certain amount, a few dollars a month for the live data subscriptions, because actually all the live data is they have to subscribe to this company, Intercontinental Exchange. So data subscription is also a part of the income from this company. Only these two parts is already generate about $5 billion a year. So we expected this one will keep increasing year on year. So this is the history of this company. This company founded in 2000s, and then it subscribes continuously do some merger and acquisitions, and then until today it is one of the largest company in the world that offering the for you to trade, for you to invest. Wherever that you invest or you trade, this company will benefit something from you. Okay, we know that this business is a good business, have the wide economy mood. So we have to look at, is this company earning the money or not? So by looking at the revenue, net income and cash flow from operations, and we can know that from 2006 they are actually keep increasing year on year until the TTM. I know that this is a little bit hard to read, so I put it on the chart for you. You can see the blue color is a revenue. Revenue is keep increasing year on year. Then the orange color is a net income. I would say the net income is not really increasing, but it's considered really flat, but slightly increasing, very slow. The cash from operation is also increasing, but very slow. This is the part of the reason that why the net income and the cash flow is increasing so slowly, because this company is not the high growth company, it's not the cyclical company. This is considered a very defensive company. Yeah, and then part of the reason is also because you know that in this very competitive environments, the broker is offering the free commissions, so their clearing part maybe will be impact, but the data subscription part will be more and more increase the revenue. So I will say that this company is earning the profit year on year every time. So after looking at the cash, and then we also have to look at the company debt, because we have to ensure that this company have the very healthy debt. Their short-term debt is only about 700,000, and then the long-term debt is about 7.7 million. So by looking at all the ratio, you can see the current ratio is 1.01, considered a pass. Debt servicing ratio is 11.26, is very good. Interest coverage ratio is 9.93. What does it mean? That means that the net income from this company can cover up to 9.93 times of the interest that they pay every year. So the debt to EBITDA is about 2.35. It's considered a pass. So from here, we can conclude that this company is having a very healthy debt. They have no issue to pay all the debt at the same time. So it's pass. After that, we have to look at the past and the future growth rate. From the past 5 years, the growth rate from this company, Finviz, Yahoo, Simple, Wall Street, Reuters, and the Jack.com, the average is about 14.63%. This is the past 5 years. And then the next 5 years, those analysis, the average is about 8.85%. I will say that 8.85% is considered a very conservative growth rate for the next 5 years. Why? Because everything is changing. The young generations, they're not like those old generation, like your father and my mother. They like to put the money inside the banks. They feel that put the money in the banks, earning the interest is the very safe, or they put in the fixed deposit. But with this current economy, the interest is very low. So people are starting not to put too much of the cash inside the bank. Instead, they put their money inside those financial market, buying the stock, buying the unit trust, buying the mutual funds. They want to invest their money because they know that by investing the money, then they can let their money work hard for them, then they can retire early. So in these situations, more and more young generations will put their money into the financial market. So what they can do is buying the stock, future, or options. Wherever they buy, then this company, Intercontinental Exchange, will benefit something from those people, whoever is investing. So this is the growth rate from 2006 until 2019. You can see that the growth, the revenue is keep increasing every year is increasing. It means that compared to the past, more and more people are actually investing. So we have to look at the return on equity. You can see that from 2015 is only about 9%, 9.38, 2016, then 2017 go out to 15%, then 2018, I said that 2017 is an exceptional years that the ROE is increasing. But I will say that ROE is considered consistently increasing, or also more than 10%. I will say that it's considered a pass. Okay, so we know that this company is a good company. The business model is good, have the very wide economy mood. We know that this company generating the very good cash every year, generating the more and more money. And then we also know that this company have the very healthy cash flow. And then also know that this company have the very healthy debt. Also know that this company have the high return on equity. So we must look at, is this company currently overvalued, undervalued, or at a fair value? By looking at the valuation method 1, the historical PE, you see the highest is about 51 or 52. Yep, the highest PE. Then the lowest is about 18. Yep. So right now the PE is about 20, maybe 27. So this PE is from 2007 until the last quarter, most recent quarter. I said that by using the PE ratio, this company is slightly undervalued. It's not at the fair value or overvalue. Fair value maybe is PE will be about 30. So this is just one of the valuation method. The valuation method 2 is using the intrinsic calculator. By input all these data from the website, the Yahoo Finance, or those that websites, those analysis website, I get the final value is about $116. So this is the fair value that I calculate. So by looking at this fair value, we go and see the chart. Is there a current price below 8 or over value? So this is a 5 years weekly chart. Okay, this line is the MAS, just a moving averages. This is 50, 100, 150, 200. Okay, by looking at the weekly chart, we can see that previously was support by a 50 MA. Then during the 2018, the bear market is supported by 100 MA. And then the most recent, the COVID-19 crash, it supported by 200 MA. Then go out, come down, supported by 50 MA again. I would say that 50 MA in the weekly chart is a very strong support level. So current price is around here. So current price is, I think should be quite fair value. Yep. So I will only buy once the price hit the 50 MA, the first support level at $93. Then the second support level is $88. The last support level is about $78. So I will say that if you are the investor, you should use the dollar cost averaging. Example, you have the $1,000, you can buy a 30% at the 50 MA, another 30% at the 100 MA, and then the last 40% at the 200 MA. Yeah. So in here, I conclude that this company is a very good company to include in your long-term portfolio for you to generating the more money for your retirement. Okay, if you like our video, please give us a thumb up, share the videos to your friends, and subscribe and open the notification so that once we update the videos, then you can receive our notifications. These videos is just mainly for the investments. If you are the trader, we also have some videos is about the cryptocurrency, because investment we are doing the stock, trading we are doing the cryptocurrency. So we'll do more videos for the trading about the cryptocurrency in the future. So please subscribe and then let us know that what is you thinking about this stock. Leave the comment below. Thank you very much. See you again. Bye bye.